that maybe are running a couple minutes behind a chance, because I do see people coming in still. So I just want to give people a couple minutes before we kick things off and get right into the full swing of it. Again, I want everyone to sort of put as much attention as they can into this webinar, because this is going to be jam-packed. This is going to be full on. Okay, I'm not leaving anything on the table. I'm going all in, and I want to maximize the time that we have, and I want to make sure that you guys that have gotten on and put your time into this to actually get as much as you possibly can out of this webinar. All right, so wait one more minute before I kick things off. In the meantime, can you guys just type in the chat box? Let me know where you guys are from. Let's see. Just waiting on some answers here. Yeah, tell me where you guys are from, and yeah, it would be good to get an idea of where everyone's connecting in from. Right on. Okay. Great. Okay, use the chat box, not the question box, guys, not the question box. Chat box, please. Okay, so there we go. Oh, not to use the chat box, use the question box instead. Sorry, my apologies. Right on, there we go. I do see your question. I do see your question. Your answers there, awesome. Coming in from Dallas, Fort Lauderdale, awesome. All sorts of places. A lot of people from Texas, Romeo from Dallas, Scott from Atlanta, awesome. Great Lakes, Fort Lauderdale again. Wow, amazing. Okay, great. A lot of people. Okay, wow, a lot of people from Europe here. I'm seeing Canada, Vancouver, awesome. San Diego, right on. Welcome, guys. Thank you, everyone, for joining. All right, I think this is great. I think we're about ready to get going. A few of you from South California, awesome, great. Again, I cannot thank you guys enough for joining, and I'm super excited to get going. So let's kick things off. All right. I am here to obviously talk to you guys about building wealth, building sustainable, achievable generational wealth through the financial markets. Now, the financial markets, I use that word, it's just a fancy way of saying the stock market. All right, that's essentially what it is. Like I said, I've been doing this for a very long time. And it would be awesome to kind of give you guys the opportunity to see into my world and what I do. So let's kick things off first by telling you a little bit about me, right? So, I mean, many of you know who I am as to what I do, but for those of you that are new, that haven't really had a chance to, converse with me, interact with me, I'm going to take a little bit of time, not too long, just to give you a brief synopsis as to who I am, what I do. So I am the founder and president of REITs International. I started the firm back in 2012, and I have over 11 years worth of trading and investing experience in the stock market. All right, I've been doing this for pretty much my adult life. I'm currently 27. I actually turned 27 last month. And so, you can tell I started very, very young. And of course, it's been a phenomenal experience. It's worked out really well for me, and I was very fortunate to officially become a multimillionaire by the age of 22. All right, that seems like ages ago, but it was about 5 years ago now, right? So I've continued to trade, invest. I've continued to, follow my passion, and I'm a seven-figure stock trader and investor, and I'll actually show you my account value as of recently. Unlike others, I believe in transparency. I want to make sure that everyone is aware as to what I'm doing. I want people to know that, this is not just me talking, but I actually like to walk the walk as well. Last year, I founded my hedge fund. Last year, again, that's for accredited investors. I'm not going to go too into detail as to what that is for those of you not familiar, but it's been a wild ride nonetheless. I've also been a mentor and teacher to thousands across the globe, right? So obviously, if you receive the emails, you would know that I'm a mentor and teacher at Secret Entourage. The guys and the team at Secret Entourage are fantastic. The members are absolutely out of this world, and it's been a joy to interact with all of them over the years. And of course, it's not just the stock market that I have access to. I have multiple different businesses ranging from gas stations to real estate to consulting. And over the past, I would say 6 years since I founded REITs International, I've really put everything I can into making sure others are able to get access to the financial, I would say, information, the correct information, get access to mentoring guidance that I never had access to when I was growing up. Okay, and it wasn't even that long ago, right? It wasn't that long ago that getting on a webinar was like a foreign concept, right? Facebook. I remember when I started trading back in 2007, 2008, was give or take when the financial collapse happened. So it was a challenging time, but of course I took advantage of that. But back then there was no one to get on a webinar, or no one to kind of help me start. So I had to do it all on my own. All right, so it's been quite the journey, and as I said, I'm a 7-figure trader and investor in the financial markets, and I'm actually showing you here. Okay, I'm showing you here a screenshot just from last month, of my balance of one of my accounts. Okay, so you're taking a look at my name there. You're seeing the total balance there of one of my accounts, along with some of the sub accounts there. Right, so just coming in under 1.8 million, but that's just one account, right? This one is the second one. Again, over 2 million easily, just in my trading capital. So I feel it's important. It's important to show people that I'm not showing it for any other reason but to be transparent. It's important to understand that people will not show you this for many reasons. One, because they have something to hide. Two, because they don't have, maybe they just don't have what they're saying they do, right? They are not, let's just say, everyone's throwing out the word, professional trader and, hedge fund manager, all that, but, people may not be what they say they are. So this is why this is my chance to be extremely transparent and open with all of you guys. All right, so continuing on, if you are not familiar with what I'm showing you here, this is just a few list of my transactions just from the past couple of weeks. All right, so as you can see, I mean, unlike many of these people that say they're traders, they actually don't trade. All they do is just try and shove products down people's throats. So they don't really trade. I'm just showing you just just a couple weeks worth of transactions here from one of my accounts. Right, and if I went to the next further back, again, you're seeing some July transactions here too. About each trade approximately 40 to 50,000 on average. Each trade is what I place. Again, that all varies. Continuing on, here's one of my larger trades that I did, I would say a couple months ago. Pretty much started accumulating Apple shares, and you can see I held Apple shares at one point, 1,000 a few months back, and about a total buy-in value was about 121,000 just on this single trade. And then, obviously we let the trade and the investment work, and of course we're up 45,000 on this trade, which accounted to be about 37% return on this one trade. All right, so I'm showing you this for pure transparency. All right, I genuinely believe that people that say they do something need to actually own up and show others that they are the real deal, and hopefully that gives you some more confidence, right? That gives you some more confidence as to who you are on the webinar with. All right, I am a huge believer in flipping the script. I see a lot of garbage out there, a lot of talkers, a lot of fakers, a lot of marketers presenting themselves as something they're not. So this is my opportunity to flip the table on them, and do things my way, change this absolutely horrendous, I would say, financial education industry. It's full of snake oil salesmen, so this is my way of fighting back, okay, which is one of the reasons I actually started my firm, and one of the reasons why I started REITs International and start spending so much time helping other people and providing the realities of the markets. All right, so full force ahead. What are we going to cover today? Either you've seen the synopsis of what we're going to cover, or you've got the emails, but I'm going to run over very briefly what we're going to cover. We're going to talk about what stocks are. Okay, your exposure to the market, your exposure to stocks is going to be very individualistic to another person. I have obviously grown up in this area. I've been doing this since I can remember. So your experience is going to differ from person B. Right, so either way, I want to make sure we start off from a baseline, and I'm going to quickly explain what stocks are, what the market is, what it really means to hold and trade stocks. All right. Number two, why day trading? Contrary to belief, I mean, there's a lot of talk and a lot of hype around day trading, and as if it's the only type of trading. No, trading and investing is not day trading. It doesn't have to be day trading. Day trading is a very specific type of style, in my opinion, after spending a lot of years in the business, after seeing a lot of quote unquote traders. I can tell you that it's a waste of time, it's a waste of energy and money. Okay, and I'm not even going to start on penny stocks and forex. Okay, because if I started that, we'd be here for 8 hours. All right, so number three, I'm going to talk about why you should actively participate, why you should spend a little bit of time increasing your knowledge, being a part of the financial markets. Okay, it's very, very important to, I think every single person on earth should have some form of participation in the financial markets, and I'll show you why. Number four, how to generate passive income. So there is this movement out there that people want to generate income, passive income from real estate and investing in other companies. Well, what if I told you you can do just that from the financial markets by investing in companies that have tremendous value? They are multi-billion-dollar companies. They have access to resources and capital that people like you and I don't, and they can scale to a level that we can't. So you can invest and be a part of these companies, be part owner of these companies, and receive dividends, receive income on a monthly basis, even without having to deal with having to work for that company, right? It's pretty amazing. Like, I can make money from Apple, as you just saw, or I can make money from XYZ company without ever having to work for it. Them. I could make money via dividends, passive income, without having to ever have to deal with tenants, having to deal with creditors, banks, having to deal with checking out properties. I can make money from real estate without having to ever step into another home. Okay, and I'm going to show you what I mean by that. Number five, you can profit from the stock market, believe it or not. Okay, the average person, it was mind blowing as to how many people didn't know this. And I wanted to stress this today, that you can actually make money in the stock market. Okay, whether stocks in the market go up, okay, obviously everyone knows, okay, yeah, buy a stock, it goes up, oh my God, I make money. But you can actually make money if the stock drops, if the markets drop, or if they even move sideways. The potential to make money is not exclusive to just stocks going up. Okay, and that's what I'll explain to you as well. I'll give you a brief primer on how you can make money whether stocks go up, down, or sideways. And the beauty of it, the beauty of the style that I teach my students and I provide access to my members, is they don't have to sit there looking at the computer. They don't have to quit their job. They don't have to, sit there looking at lines and graphs all day long. Okay, it's frankly a waste of time and resource, and actually works against people that do this for too long of a time, because now they're forcing trades. So I'm going to talk to you about how you can do it in less than an hour a day. Okay, the stock market, the US stock market, and the broader stock markets are open 5 days a week. So it's not a 7-day thing, it's 5 days a week, usually 9:30 a.m. to 4 p.m. Eastern time. All right, next, finally, I'm going to eventually give you guys an opportunity like no other. I'm going to give you guys a special gift because I really, really appreciate you guys giving your time and joining me. So stay till the end. I have an exclusive offer as well. And last but not least, we are going to have a no holds barred Q&A. I love the Q&A sessions because they're rapid fire. I love answering questions because everyone's coming from a different angle, and I love hearing what they want me to talk about and answer. So we'll definitely have that. So that's going to be tremendous value in and itself. All right, so moving on with our schedule, what are stocks and what is the stock market? All right, so let's get things rolling. A stock is a share in the ownership of a company. Okay, so in short, when you buy a stock, you are part owner. You are actually part owner. It may be a tiny, 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 minuscule amount, but you're still a part owner. Okay, and by buying these stocks, you are buying and selling between not the company and yourself, but between other buyers and sellers. That's why it's a market. It's a marketplace. Think of it like going to, a mall. There's a bunch of buyers and sellers coming together, right? Coming together to buy and sell different products. Except in the stock market's case, it's for stocks. All right. So it's a digital exchange. It's a place where buyers and sellers come together to trade, right? So when you own stocks, unlike Forex, okay, unlike other things, you actually are holding an asset, okay? Stocks are actually an asset, okay? Sure, they fluctuate in value, but they are counted as an asset. So if you were to go to a financial advisor and they asked you for a list of all your assets, you could show your stock holdings as an asset. Okay, it's like owning anything of value. Okay, so that's the amazing thing that people don't understand. Okay, also stocks represent a claim on the company's assets and earnings. You're not just trading some ticker. Okay, you're not just trading some stock. Sure, you could be, but there is actually a company behind it. There's a flourishing business. There's multi-billion-dollar companies. In the case of recently Apple, that just was the first trillion-dollar company. So you can see the scale and the size of these companies, right? You can see that sometimes you can't even comprehend how large these companies are, right? Whether it's Google, Microsoft, Amazon, Facebook, and of course Apple, right? You are part owner and you are eligible to share in the company's earnings. All right, as these companies do well, you as a stockholder can do well. And I just shown you just a simple example of how I've done well just in one trade. Okay, that trade that I showed you of me making give or take 40 grand on an Apple trade lasted, I would say, maybe a month tops. Okay, I didn't need to sit there and manage it. I didn't need to go to Apple's headquarters. I didn't need to go, work for them to make money. So this is the amazing part. All right, as you acquire more stocks, also keep in mind your ownership increases. Right, Warren Buffett, for example, is a notorious investor for taking control of large companies. Obviously, we would need hundreds of billions of dollars to have a significant stake in a company like Apple, but doesn't mean that it's nothing. You actually get voting rights no matter how many shares you own. If you have one share, you technically have one vote. Okay, you get voting rights and you get to weigh in on ongoing management decisions in the company. So for example, in Apple's case, you wouldn't get to, if you own 10 shares or 1,000 shares or 100,000 shares, even you wouldn't get to weigh in on the name of the next iPhone, but you would get to decide and vote using your shares as proxy to decide who the next, director would be, the next board member who represents the shareholders. You get to have a participation. There's nothing like this, when it comes to Forex or anything like that. Okay, so the amazing part is you can do this from anywhere in the world. You can participate in the growth or decline of a company without having to work for it, and you can be anywhere in the world. Okay, one last touch point is we have to understand that stock markets actually trend upwards. Believe it or not, they trend upwards. So time is actually on your side. This is why it makes no sense for me when I see people trying to day trade. Like, it's ridiculous. I'll get into it, but the stock markets trend upwards in a longer time frame. All right, so I want to get rid of this day trading myth. I want to completely debunk this, and I know the day traders around are going to hate me for this, but so be it. I genuinely believe that, if someone's going to try and day trade, well, sure, it's up to them. But, I say they might as well shoot themselves in the foot because that's pretty much what they're doing financially. Okay. It's ridiculous. Okay. It's absolutely blows my mind, how people get sucked into this, I would say, pipe dream. All right. So a few facts about day trading. Okay. Day traders, contrary to belief, are sitting there. Maybe they're spending an hour, 2 hours, 4 hours, whatever, in front of the screen, trying to get in and out of multiple trades within a very, very, very short amount of time. Okay, it could be seconds, it could be minutes. That's the definition of day trading: entering and exiting multiple different stocks and not holding any stocks overnight. They don't hold anything overnight. Okay, so that's the pure definition of day trading. Okay, over the past, I would say 10 to 15 years, it's been extremely difficult for day traders to compete against algorithms that are trading. Okay, there's computer programs, there's algorithms that are deployed by these hedge funds, by large financial institutions, even by some sophisticated large traders, where the computer is just going in and out and taking out liquidity from the market, whereas these day traders can't compete by hand. They're just sitting there looking at random charts and trying to make sense of them and trying to come up with a conclusion, and they're already too late by the time they press the buy button. All right, they cannot compete against these algorithms. They will never admit this to you because they're trying to sell you on their day trading program or whatever. Okay, it's an absolute sham. It's a waste of time, energy. And one thing they also won't conveniently mention to you is that you need, especially in the US, because the US has a PDT rule, which is a pattern day trader rule, meaning if the investor has less than 25,000 in capital and they're applying for margin to go in and out of trades, if they trade intraday more than 4 or 5 times a week, they will get flagged. And when they get flagged, their account could get shut down. That brokerage will wipe their hands with you. Okay, I've seen it happen. I've seen it happen to many people. All right, it's just not worth it. First of all, you need 25 grand. Second of all, you're going against a behemoth, and good luck to anyone that tries to make money consistently. All right, because all these day traders, they will never show you their track record. They will never show you their account screens. They will never show you their trades. Okay, you want to know someone who's legit? Go and ask them for their track record. Go and ask them for their transaction history. Go and ask them for their account value. If you find someone, send me a message. I will personally pay for you to take their course or whatever. Okay. Next, short-term intraday prices. So when stocks move up and down, we know stocks move up and down, but when they move up and down in the short term, they are actually closer to statistically random. Okay, you can look this up. I'm not going to go into this whole theory about random walk theory, but you can look it up. Short-term intraday movements are very, very close to random. And what are day traders trying to do? They're trying to look into something that's nothing. They're trying to look down a rabbit hole where there's no rabbit. Okay, they're just searching blindly for something, and it's frankly futile. Okay, unfortunately, this entire day trading space is full of get-rich-quick types. There's people just pumping up garbage companies and trying to get people sucked into their programs and whatnot. So that's another knock against it, right? And I think the biggest problem with day trading is, the numbers speak for themselves. There've been over 90% failure rate just within the first year. Okay, and I've seen this with my own eyes. I've seen this with people that are so adamant to make it work, and I say, okay, sure, each to their own. But they come back and they say, Riz, I blew up my account of $25,000-$30,000, and I said, well, it's an expensive lesson, but it's a lesson nonetheless, right? So don't be one of those people that tries to essentially do something that's nigh on statistically impossible. All right, sure, there's a very, 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 very few, I would say maybe 1% of the people that can actually make it consistently. Everyone can make money placing a few trades. Consistently, I would say maybe 1%. Okay, and those 1% are sure as hell not out there, talking to you about their programs. Okay, it's all the others that are failures. Okay, because the only way they can make money is by selling shit to you. Me, I'm in a unique position to talk about the markets very openly, tell you the good and bad, because frankly, I don't care. I don't care. I don't get on these webinars. I don't teach my students. I don't have my community. I don't have my members only community just so that I can, rotate memberships. I do it so that people can have skin in the game and they can learn how to do what I did. Okay, because I realized that just because I didn't have the ability to learn from someone else doesn't mean someone else shouldn't. All right, moving on. Something to consider now. Okay, this is interesting. All right, since the financial crisis in 2008, okay, we all know at some point in time, depending on how old you guys are, some point in time, we have heard of the great financial crisis of '08. Maybe it's personally affected us, right? I know it's personally affected pretty much everyone I've spoken to in some way, shape, or form. Maybe they lost a job. Maybe, you know, their home values plummeted. Maybe they had to, you know, get more credit or refinance their home. Maybe they had money in the market when the markets dropped, right? And only the people that didn't know what they're doing got caught with their pants down. Okay, let me tell you that, okay, because the signs were there. Okay, so don't be fooled that, oh my God, snap at the finger, market tanked. Nah, doesn't work like that. Okay, and the smart ones made money when the market tanks. Okay, and I'll show you how. So believe it or not, since 2008 to now, okay, so let's just say the last 10 years, the last 9.5 to 10 years, the stock market has gone up more than 280%. Just the stock market. Doesn't mean you actively trade it. Okay, doesn't mean you actively trading. If you just took your money and plopped it in there, an X amount of dollars, and just let it sit there from 2009, January 1st to now, if you put 10 grand in, it would be closer to about $38,000. And I'll show you on the graph. All right, so what this means is if you look back the last 50 years, we have hundreds years worth of data in the financial markets. And I can tell you, if you look back past 50 years, feel free to do your due diligence on this. You're going to see that the average annualized rate of return, okay, is 8%, meaning not the markets don't just go up 8% every year, but what that means is up and down year after year. You are looking at an 8% annualized return just by being invested in the broader market. Literally, just the broader market passively. Okay, you can make 8% annualized. That is extraordinary. That's an extraordinary return. Believe it or not, it may not sound sexy, okay, but for doing next to nothing, there it is. Of course, we're taking some risk, and if you can hang on for the ride, you'll be much further ahead. And I'll show you shortly the opportunities there are to absolutely destroy that 8% annualized return and destroy that even 280% return. Okay, because my rate of return is actually closer. Okay, just hang on there because I don't know if you read the email or not, but my individual rate of return since I started with about 5 grand and to the amount that you're seeing now, if you were to do the total return, it's actually closer to, and I laugh every time I say this because it's absolutely insane to me too, but it's closer to about 40,000% return. So in the same time that the broader stock market's gone up 280%, of course, I've carved out this tremendous performance, and it is about 40,000%. Now, I'm not saying, you know, you're gonna get that kind of return, okay? Because I am technically one of the very, very few that has been able to do that. But I do know, and I genuinely believe with full conviction that everyone has the opportunity to do well in the financial markets. Maybe it's not 40,000% return. Maybe it's not, 5,000%, okay? But reality is if you can do 280%, and that's what the market showed in the last 10 years, I'm confident that you can do better than that. Okay, and even if it's 500% or 1,000% return in a span of 10 years, that is amazing. That is amazing. Okay, so just to put it in context, 1,000% return is essentially like you 10 times your money. Okay, so keep that in mind. So opportunity to make money regardless of whether stock markets go up and down. Okay, I'll show you that. You can do well without having to spend no more than an hour a day. Okay, and you don't have to sit there an hour consecutively. You can, be on your phone. You can, place a few trades, look at the market. Okay, nothing's going on. That's fine. Okay, you don't need to spend hours and hours. You don't need to quit your job. Okay, because people think, Riz, I want to start trading. I want to quit my job. Well, why? Why would you? Okay, I am like, I would say maybe in terms of when it comes to hedge fund managers, I think there's about 0.1% of us in terms of the entire population, that maybe 0.01% even, that are actually, I would say, investment professionals. I genuinely tell people that they don't need to do it for a living. They shouldn't do it for a living, okay? Because most people will probably shoot themselves anywhere before they actually get to a level they want, because this thing, doing this stuff for a living can wreak havoc on your life if you do it full time. You don't need to do it full time. In fact, people that do it full time don't do as well, all right, which sounds absurd. So in this case, doing more is not necessarily better, all right? So when I've told you this 280% return over the past 10 years just by passively investing, well, what if I told you that most people actually don't get there? Most people actually don't get that return. Okay, A, because they don't invest at all. Okay, or B, they are put their money in because they don't understand what they're doing. They put their money in mutual funds and they underperform. Mutual funds are notorious for underperforming, and I'll show you actually proof of that. Right. So what do they do if they want to do it themselves? They think they can, skydive without a parachute, pretty much. So they go out on their own and they get absolutely clobbered. They get clobbered because they just follow a hot tip or they follow some marketer or some social media guy, and they just follow that person and think they're going to do well, but as time goes on they come up short. Right. The stock market returns I was telling you is in fact on the chart here. So if you take a look at the left hand side of the screen, you will see that if you put $10,000, okay, in the broader US market, you can do that. Okay, there's one ETF called the SPY. Okay, that's the Spider S&P 500 Index ETF. Okay, if you put $10,000 in there, this is what you're looking at. Okay, if you put $10,000 1st of January and waited up until now, you would be pretty much looking at over 38,000 just there. You didn't need to do anything. Okay, that is the power of just the broader market. Okay, you're not even actively trading at that point. You're not even doing anything. You're not even looking at it for 10 years. Okay, that's the broader market of long-term returns. This is what you have missed out on. I hate to say it, but this is what you have missed out on. I said this, and I said by not attending this webinar, by not attending and participating and being a part of this webinar, plus not investing in the market, you have lost out on an opportunity on one of the greatest bull markets of our lifetimes. Okay, and you are looking at this chart from my trading platform. All right, moving on. I will show you, give me 1 second actually. Here, the actual investor returns are quite different. The reality is the market goes amazingly well in the long term, but the average investor, if you take a look on the right hand side, actually does 2.11% a year. That is horrendous. That barely keeps up with inflation. And that blew my mind when I was looking at these stats a few years ago. And I was like, what? Why are people doing so bad? And I realized that they do not understand what they're doing. Okay, to put it into correlation, put it into comparison, you have inflation is 2.18% a year, meaning the value of your money is actually decreasing every year. Okay, if you have $100 in a bank account and you think, oh, okay, I have $100. Well, it could still be $100. Okay, maybe you earn $1 of interest, but guess what? You're still down. You're still down. Why? Because your $101 doesn't get to buy you $101 worth of stuff next year. It could essentially buy you $98 worth of stuff. Okay, so the value of your dollar is decreasing because other things are getting more expensive. All right, oil has an average annualized return of 3.25%. Again, these are stats from the last 20 years, from 1996 to 2015. Okay, homes, believe it or not, home values don't go up 30% a year. Okay, they don't increase 50% a year, or 60% in 3 years or something like that, which is what's happened in Vancouver and Toronto area. Okay, up in Canada, home prices actually annualized increased 3.2%. Okay, compare that to the international stock market. It's about 4.4, sorry. Gold prices, 5%, bonds, 5%. And then you have stocks, like I said, stocks beat and decimate every other asset class out there. The problem is people don't know how to take advantage of that. They don't know how to participate and use and learn specific skill sets to take profits out of the market. Okay, so as I mentioned before, people, what do? They think, oh, I don't know how to do this. I don't have time. I'm just going to give it to a financial advisor at my bank. I can tell you from experience of being on the other side, financial advisors themselves are absolutely horrendous at managing their own money, most of them. Okay, I've seen plenty of financial advisors that are in tremendous amount of debt. They have no money themselves. So how are they going to guide you on what you should do with your money? Okay, and this basic concept of mutual funds, I have a big beef with mutual funds because they charge exorbitant fees and they do jack all with them. Okay, People that put their money in mutual funds are getting ripped off left, right, center, because only 24% of mutual funds actually beat the market over a 10-year span. That's pathetic. Okay, that's pathetic. Okay, they're paying the mutual fund and the financial advisors to literally lose them money, essentially, right, in the long term, when they could have essentially just put their money in a long-term ETF that's passive, that's extremely low cost, and they could have done way, way better, right? And to put things in perspective, you may be wondering, well, all these, all these super wealthy people, well, how do they keep their money? How do they keep getting more money? They're spending left, right, and center. How are they doing it? Well, there's no secret. There's no secret. If you pull back the curtain, you would understand. You would understand what they understood from a very young age. Okay, especially after they get to a certain level, what they do is they invest, they save, and they invest. They do something with their money. This is the common problem amongst, I would say, the globe, but especially in North America. There's a stat, I'm not sure if you guys are aware, but there's a stat that says, and the average American is approximately $600, okay? Only $600 away from being in financial chaos. I mean, there's a $600 payment away, unforeseen circumstance. Maybe their car breaks down or they got into a minor accident, okay? One $600 payment away from being absolutely screwed financially. That is not acceptable to me. That is not acceptable to me, and I am going to do whatever I can to make sure whoever it is can participate, can further their financial situation, get better their financial situation. Not everyone's going to become a millionaire right away, but if they understand the core concepts, they understand how important it is to save, and I'm going to walk you guys through this chart, they will truly appreciate how the wealthy have gotten wealthy and how they continue to get wealthier. Right, so this chart is from JP Morgan Asset Management. Obviously, you've all pretty much heard of JP Morgan, the bank. We are going to assume that the people that invest their money in the market earn an average of 7% annualized return. We know that the market actually returns about 8%, but we will go with 7%, okay, which is what this is showing you. If you take a look at Susan, okay, who's the gray line, all right, she starts investing with $5,000 annually, okay, between age of 25 and 35, she puts in 5,000 annually. Okay, that turns out to be 50 grand. Okay, as she's putting her money in, as she's receiving an annual return of just 7%, okay, 7% doesn't sound sexy, I know, but just 7% a year, consistently, annualized, she would be left with from, let's just say, 25 all the way to 65, she'll be left with about $600,000, okay? All right, not too bad, okay? Of course, she put money in herself too, but she only put 50 grand in total, all right? Notice how it snowballed. Then you have Bill, who's investing, 5,000 annually between 35 and 65. So he started a little bit late. He started a little bit later than Susan, okay? But he too puts in actually more. He puts in more than Susan. He puts in 150 grand. And because he started late, look at where he ends up. He actually ends up with $540,000 at 65. So not only did he put more money in, okay, he got the same rate of return, but he actually ended up with less money simply because he started late. All right. And then you have Chris. Chris is smart. Chris is smart. What did he do? He started putting money in annually, 5 grand in the market at the age of 25. And he continued to do that. Okay. And he invested a total of his money, 200,000 over a year, over a span of, sorry, not a year, over a span of 40 years. Okay. And you understand that because he did that from a young age and because he kept making an annualized return of 7%, his wealth in the stock market, his portfolio value would have gone to 1.1 million. Okay, that's a huge divide. That's a huge divide simply because they started early, simply because they consistently contributed, and because they started. None of these guys and girls, in the case of Susan, would have made as much money if they didn't participate. If they just put their money in a savings account and were scared, didn't want to take any risk, well, bye-bye. There's no gains. There's no gains for having money in cash nowadays. All right, so harnessing the power of compounding is absolutely amazing. Warren Buffett calls compounding the eighth wonder of the world. I personally call the stock market the eighth wonder of the world, but the point is, it's a tremendous, tremendous weapon for you to utilize in getting to where you want to be. Okay. Moving on. Again, I'm throwing a lot at you guys, so I apologize, but I want to stick to our schedule. I want to get through everything as much as we can. Now, a lot of people have asked me, Riz, I wanna buy real estate, and I wanna, make money with multifamily homes, and I'm gonna fix this up, I'm gonna buy this, I'm gonna sell it, I'm going to wholesale. And I say, sure, okay, go ahead if you really want to. Okay, if this is what you want to do, go ahead, by all means. If you have the time, energy, money, sure, right? Maybe you have the network, sure. But what I found is majority of the people don't. They don't have the time. They have a job, they have a career, maybe they have a business already, they have family, they have commitments. They don't have time to go out and scope out shanty houses that they can fix up and flip. Okay, maybe they're not in a part of the world where they could even have the opportunity. I know for us geographically, I mean, the average home where I stay is approximately $700 to $800,000. No one's buying that, and fixing it up and flipping it. Okay, it's just all the juice is squeezed out of it already. So what are people going to do? There's people that have the opportunity, but majority don't. So they want to generate some passive income with the money they have. Well, there's opportunities for that in the stock market. Okay, believe it or not, I didn't just take my money and just constantly actively trade. I actively traded a significant portion, but what I did was I diversified in the market itself. I took a certain portion and I put it in companies that can generate a monthly income for me. Okay, I don't have to do anything to receive these monthly or quarterly cash dividends in my account. All right, and one of the ways I did it was by investing in REITs. So that's going to be a crash course on REITs as well. What are REITs? Okay, they stand for Real Estate Investment Trusts. Okay, that's a fancy word of saying that it's a large, super large company that buys and holds real estate. And you, as an investor, get to share in those profits and the income. Okay, they trade like any other stock in the stock market. So believe it or not, you don't got to go and find this REIT or contact some guy in back alley. You can trade, hold, and invest in these companies directly from the stock market. Okay, in fact, I have an absolutely phenomenal list of REITs that I continue to hold, trade, and go in and out of depending on circumstances, right? So unlike regular companies like Apple or anything, REITs specifically are actually a structure of business. They are required by law to distribute 90% of all income to shareholders. So imagine if I was the REIT and you were a shareholder and I made 100,000. I am obligated to give out 90,000 to all the shareholders, to you guys. I'm obligated to do that. Would you not want to be a part of that? Like, this is something that blows my mind yet again. People have not heard of. And if they have heard of them, they haven't bothered to look into them. They haven't bothered even trying to invest in them, right? There's a huge missed opportunity. Okay, the amazing part about REITs is they're low volatility, meaning they don't go up and down too much. Okay, granted, they can go down, but they can also go up, right? There's a couple REITs that I've held that pay me approximately 8% a year just in dividends. Okay, 8% a year just in dividends, and they pay me monthly, so I get monthly cash. Plus, the REIT prices has gone up. So there's one REIT that I've held that paid me 8% significantly for many years, and not only that, but it has doubled in price in just the last 2 years. So it literally can be a win-win situation. And for what? I didn't have to go check out any homes. I didn't have to deal with no tenants. I didn't have to maintain a single, fix anything. I didn't have to maintain a home. I didn't have to deal with, tax paying, let's just say property taxes, dealing with banks, dealing with all those horror stories that can go wrong. I know they can go wrong because I still have 2 residential properties that I have on lease and that I have tenanted out. It's great. I'm not going to complain because I've been able to buy them outright and own them and just make monthly income from it. But if I were to do it again, I wouldn't bother. I wouldn't bother because I know it's been a headache. Right now it's on autopilot, so I'm lucky, knock on wood. But I know it's been a headache. Had I known better a long, long time ago, I would have, in fact, honestly said, screw it. It's not worth my time. I can make a lot more and do a lot better in the financial markets by putting this money in REITs, not having to deal with these shitty tenants, having to go to court and trying to get them to leave because they're squatting in a home for 6 months at a time, and the city won't let me remove them simply because it's, 40 degrees Fahrenheit. So these are things you don't have to worry about. Okay, the amazing opportunity of passive, genuinely passive income. Everyone says passive income as if it's like some godsend, but this is genuinely passive. You don't got to do, you don't got to go there. You don't got to, fill out any forms. You don't got to, look at the property. You don't got to do anything. You just got to make sure that those cash dividends are coming in. Okay, maybe you want to look at them once every 6 months, maybe. All right. So the types of REITs, there's three main types. Okay, there's equity REITs. Okay, they own, purchase, and manage income producing real estate. Again, multi-family homes, multi-family, real estate. That's what these are. That's what they're doing. They invest in, literally thousands and thousands of properties. Okay, that you and I simply don't have the scale to do, and they then pay out that income to shareholders. Okay, investors in equity REITs have the potential to not only earn dividends through rental income, but also any appreciation in property value when it's sold. So when these REITs sell their properties, when they sell their multi-billion dollars worth of portfolios and buy new ones at discounts, you as shareholders get to participate in that. Mortgage REITs. These are REITs that essentially lend money. They're creditors. They lend money to people or other real estate companies to operate and acquire real estate, right? So they generate income by essentially lending out funds, right? So you are earning revenue through their interest generated. Okay, mortgage REITs, hybrid REITs. They're a combination of both equity and mortgage REITs. Okay, their income producing potential comes from rent and capital gains. Okay, my go-to, my personal preference, okay, and I've participated in both, and I personally prefer equity REITs being head and shoulders above anything else. Okay, any other type of REITs. That's my personal preference because they not only pay consistent dividends, they can increase their dividends too. Oh yeah, they can increase their dividends too. So now, what you were making last month doesn't necessarily have to be the same. It can actually go up. Okay, plus the value of their stock and the company can go up too. One thing I didn't mention was when you buy a home, okay, let's say you buy a home for $500,000. What if you wanted to, sell it or get rid of it? I can guarantee you're probably not going to be able to do it in the span of 1 day or half a day. With REITs, just like stocks, if you really, really wanted to exit, you have the opportunity of exiting with the touch of a button. It's liquid, what we call liquid. If I have $500,000 in 10 different REITs, in 10 different REIT companies, and I say, you know what, I'm done. I want to retire, whatever, I'm done. I want to take this 500 grand out. Press a couple buttons, bing, 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 done. Cash in my account, sold, done. You cannot do that. You cannot do that no matter what other physical asset you buy, period. Okay, that's one of the benefits as well. So type of properties that REITs hold, well, they can hold, many different properties, just like you and I would, right? They can hold office buildings. Well, the average individual doesn't have enough capital to buy office buildings outright. There you go. Healthcare facilities. Can you own hospitals? Well, I mean, you'd have to be really, 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 really well off to go out and buy healthcare facilities on your own. This is why scalability comes into place. They buy warehouses, they buy commercial properties, they buy office buildings, healthcare facilities, they buy apartments and multi-family units. This is what everyone's been talking about. And I'm like, well, REITs do that on times 100 scale. So why are you busting your ass trying to go door to door, trying to, get people to liaison between you and network and spend all this time when you could have it done for you, right? It blows my mind, but people do not know any better, okay? REITs also invest in all sorts of things, right? Hospitals, healthcare facilities, self-storage places. You get a massive amount of diversification by participating in REITs. And to give you an idea, again, I'm showing you just my dividends for the month of July. Again, this will vary. Not all my entire portfolio is in dividend paying companies, only a certain part. Majority of it I actively trade, but I would say maybe 10, 15% of it is actually in, dividend paying companies. And if you were to tally this up, okay, most of it is, some of it's Canadian income, some of it is US. But if you were to tally this up, this is easily give or take, $3,000 just US just coming in monthly by me doing nothing. Okay, it's just, again, it's something that you can achieve too. Maybe not at these specific amounts, but guaranteed you can have monthly income coming in. All right. So how do you make money? After all, how do you make money? I said you can make money when stocks go up, down, sideways. Well, how do you do it? Well, contrary to belief, you can make money obviously when stocks go up. How would you do that? Well, you buy a stock, right? You buy a stock with the hopes of selling it later on for a higher price than what you paid for it. Simple, right? Obviously, everyone knows that, right? We call that going long. Now, contrary to belief, it's not long term. Long just means you're buying the stock. Okay, I'm not talking about the time frame here. I'm just talking about going long, meaning buying a stock that you feel will go up in price for whatever reason. The opposite of that is going short. I want to listen to this now. Going short is the opposite of going long in a sense that you reverse the order that you do in it. You essentially sell this stock, okay, XYZ company that you think, is going to drop. You don't like, you think it's garbage, you think it's going to drop. What do? You sell it by borrowing it from your broker. Okay, you sell it and you hope that after selling it, the price goes down, maybe next day, next month, next quarter, so that you can buy it back because you owe those shares back to the broker, right? You owe those shares back, so you are eventually going to have to buy it back. We call that covering. We buy to cover. You buy those shares back, hoping that it's going to be at a lower price. So if you shorted, okay, if you sold or you shorted XYZ company at $100, and what did you do? You waited a couple weeks. The stock did indeed go down for whatever reason, and now it's $60. Well, what do? You can choose to buy it back if you want, okay, and give those shares back. And that difference of $40, you get to keep. You just made money by the company's price going down. That's going short. Okay, you can sell a stock without actually having to own it. You borrow it with the hopes of buying it back at a lower price. It's simple in context, but it's absolutely genius. Okay, it's amazing that you as individual investors can do this. Okay, mutual funds can't even do this. Okay, this is why mutual funds, and I feel sorry for everyone's 401ks, and I apologize in advance that, if you have a lot of money in 401ks, I'm not trying to scare you, but if the markets do pull back, I can tell you without a doubt, as someone who's been on the other side and who's advised many clients in their 401ks, in their employment plans, in their mutual funds, I can tell you that mutual funds pretty much track the market. They underperform because of the fees. But what happens to the market eventually happens to these stock mutual funds. If the market dips, your mutual fund and your 401k accounts will go down too. Why? Because mutual funds can't go short. They don't have access to the stuff that you and I have access to. It's amazing. The individual investor has tremendous power and tremendous resources at their fingertips to make money from the market like never before. Back in the day when I was growing up, I remember seeing my father, make a phone call down to some guy, and I wasn't sure who it was. I was maybe like, I don't know, 8 or 9, and he was talking on the phone. I'm like, okay, I don't get it. He was telling this person on the phone to do something, buy and sell something at a certain amount. Okay, and I didn't understand what it was, but eventually I realized as I got older that, okay, he was making a phone call down to his broker to sell XYZ stock at a certain amount. Okay, we don't have to do that anymore. We don't have to do that. He would have to wait for the end of the day to get the newspaper to be able to tell what price a stock was for yesterday. We get real-time data on our phones, on our computers, what's happening in the market second by second. We don't have to place a phone call. We can trade from the Bahamas. You can place trades, buy, sell from, honestly, I don't care where you are in the world. As long as you have a basic internet connection, you can place trades from your phone, laptop. You have 5 screens, go for it. You have 1 screen, go for it. You have 1 iPhone, go for it. Okay, whatever device you're on, you can do it from anywhere in the world. All right, so here's an example. Here's an example. So long trade, buying. First example up top, you would buy the stock, okay, where it says buy. Again, the stock goes ups and downs, right? Stocks move up and down, okay, especially in very, very short term, they're very erratic. Okay, you can tell that this stock price is trending up. What happens? You eventually sell it where that sell marker is, okay, and you keep the difference. The short trade is essentially the opposite of that. You sell first. You're reversing the order. You sell first, and you're hoping that the stock price goes down. In this case, it does, and then you buy it back at a lower price. Again, you keep the difference. All right, simple, but absolutely beautiful. All right, this is the kind of stuff we do day in and day out. All right, this is how I've been able to make money in the stock market, whether it goes up, down, sideways, wherever. Okay, am I going to make money on every trade? Absolutely not. But all that I care about is I come out ahead, not just in 1 year, because you can have a few bad years, but all I care about is coming out ahead for the next 2 years, 5 years, 10 years, 15 years, 20 years. This is a long game. You're playing this game for the rest of your life, and you are going to come out ahead. Okay, I have not known a single person who started doing this and who's spoken to me, 2, 3 years after and said, Riz, well, it was a bad idea. No, I haven't met that person. I've yet to met a single person who's learned from me, who's interacted with me, and has not come out ahead in the medium to long term, period. Okay, so if you thought, oh, okay, you can make some money in the market, well, what does it look like, right? What does it look like? What are we doing here? Well, it's quite simple. Okay, I'm just showing you a quick chart of a company. It's actually CGC Canopy Growth Corp. It's actually a wheat company. Recently, wheat stocks have blown up. They've gone all over the place. We've placed some trades on these. We've placed some trades, and we've done well. Right. I'm just giving you an example here of some of the alerts that we sent to our members. I share my trades. I show people the trades I'm in, that I exit, when to get in, when to get out, what I feel. I give all that. People don't do that, okay? Because all they care about is, just generating hype, okay? They don't want to put the effort in. So I give people full access to what I'm doing. I give people access to my proprietary information, and they get to learn plus earn alongside me. So I'll give you an example. We bought, CGC here, myself, my traders, my members, along with in my fund, at about $26.50. Okay, we waited. Notice each bar that you're seeing, red and green, that's the up and down movement on a daily basis. Okay, this is recent. Okay, you will notice the stock moves flat for a little bit. Okay, no worries, not the end of the world. It even drops a little bit afterwards. Okay, no problem. I let my members know, guys, it's down, all right, whatever. I'm hanging on. Okay, I'm hanging on. They have that guidance. What happens after? Boom, rockets. Takes off like a rocket from about 26, drops to about 25, 24 and a half, and just takes off from there. All right. What happens then? We sell, and in fact, just yesterday we placed a short. Okay, so meaning we are hoping that the stock will now drop. So you notice we can take two sides on the same stock in a span of a couple of weeks, even in a span of a day, right? You can profit from the same stock going up and down. You do not hold any allegiance to any company. Okay, your sole goal is to maximize your return in a short amount of time, or I would say in a reasonable amount of time, without spending all day and breaking your head. That's your goal. Your goal is to live life, okay, to have your job, career, family, okay, and grow your wealth consistently and sustainably. We don't want to bet the farm. We're not trying to get quick rich. We're not trying to, make millions in one trade, because that doesn't happen. We're systematically placing trades, hoping to make money up and down movements of the market. Are we going to win every trade? Absolutely not. Okay, but if we can do well consistently, we will come out ahead in the long term. Absolutely. Here's another example of Micron Technology. It's a chip maker. They make chips for computers. They're a semiconductor company, meaning they make chipsets for your computer, for your phones, all sorts of stuff. Okay. Far left, you'll see we gave a buy alert, okay, on that bar there on that day when it went up significantly. Again, we look at this stuff and we use my proprietary trading indicators, my strategies, my experience, a lot goes into it, but we provide this to our members so that they don't have to sit there day in and day out, okay, and decide what they should do. They have the guidance and expertise on their side. So what do? We bought there, we let our members know we're buying there, okay, they can get in, and we give them ongoing guidance, whether we're in. Technically, you could have written this thing up all the way from, 49, 40, let's just say $50, all the way to, 62 if you wanted, okay, up to you. It's up to you, okay? You would have had the guidance, but you are in control. You are in charge, right? This is the beauty of it. You are completely in charge to get in or not, when to exit, if you want to take the trade or not. You have complete autonomy. That's the beauty of it. Someone else is not looking after your stuff. Someone else is not, mismanaging it. It's you. You are in control. You're in the driver's seat. Okay, and this is what I believe, genuinely believe, that people should be in the driver's seat. Unless there's people that have, hundreds of thousands of dollars, they have 10 different businesses, they're corporate executive, they don't have time, they don't have the ability, then they come to me and they say, Riz, okay, I'm a high net worth investor. Okay, I want you to look after my money. Again, then we would have a conversation if that's right for them. But the average individual needs to take control of their finances. You notice we eventually went short, meaning we bet against the stock. Okay, you'll see that short alert after. What happened? We stuck around, we stuck through it, and it actually dropped. It dropped down, from the time that we entered short about 61, it actually went down to about, 52. And I remember covering, we bought back, we kept the difference of 52 and 61, about $9 a share we made off that, right? In a span of a couple of weeks. Eventually, the stock continued to go down. What did? We thought, okay, this 49 level is actually a good opportunity to get in. We did some due diligence. We figured it's a good opportunity to get in, and we bought. Yes, the stock went a little bit lower after we entered. No problem. Okay, it happens. Okay, eventually it recovered, and now we're seeing where it's going to go. It's been actually up today. It's up today. The stock is up today. So, it really depends on the day-to-day movement of the stock, and we keep our members updated. Here is another example on Twitter. We've heard of Twitter. Twitter's a public company. We gave a buy alert, had a massive rise post earnings, and eventually it plateaued. We made money on that rise. Once it started plateauing, we felt that the momentum was falling off. We went short, and boom, we played the earnings, and it just tanked after earnings. That's money for us. All right. Same story here. Same story here. Go in and go out. Does it mean that we make money all the time? Not always. Okay, but if we can take advantage of these price movements, we can come out ahead in the long term. To give you an idea, if someone started with 100 grand, okay, maybe they make 2% per trade consistently. Okay, again, that's not guaranteed. There's no guarantee. But if they were making 2% per trade, okay, they were doing well. Well, what happens if they are able to be consistent? Again, we're not hitting home runs here. We're not trying to make 20, 30, 40% per trade. We don't have to. We don't have to risk the home. We don't have to go bonkers. Okay, if you can do consistently well over a period of time, that 100,000, if they were just making 2% per trade, okay, after about 30 trades, they would be nearly at about 175 grand in value. Okay, you kick that up a notch. You kick those returns up to 3% per trade. And now, after same 30 trades, they'd be at closer to about $235,000. Now, if you were to able to consistently do 4% per trade, again, not easy by any means, but very, very possible in the long term, that 100,000 goes above and beyond, $320,000. Okay, the tremendous effect of compounding yet again. All right, so you're probably wondering, well, okay, Riz, you gave me all this information. Well, how does it benefit me? Well, you, by being on this webinar, have the opportunity to do everything I've said in here, whether it's REITs, whether it's trading, whether it's holding passively, whether it's benefiting from the market is what the goal is, whether stocks go up and down, you can be a part of our community. You can be a part of our community and learn and have actually guidance directly from me. There's not, in this day and age, really, I've done my homework. I figured out that no one is actually doing this. Anyone who actually is worth their weight in salt is actually not interested in providing factual, genuine insight to people. They don't want to put their time. They're too busy doing whatever else it is, taking pictures on social media. I do this for my passion. I do this to help. By all means, I leave it to people to decide, but I want to give them the opportunity, right? You get access to a chat room. You get access to live stream market recaps. You get recaps. You get access to a lot of wealth of information. Our analysis sessions, Q&A sessions. You get current and important market stock news. You get my exact trades that I'm placing. Okay, whether it's be options, crypto, stocks, predominantly stocks is what we focused on. You get access to ongoing guidance, right? Exclusive teaching and resources that are in there. Okay, and you can do all of this from your phone. You can do all this from your phone or app on the computer. All right, it's at the touch of your fingertips, literally, and it's tremendous resource. And to give you an idea what people have to say about me, I mean, there's been plenty of people I've mentored and interacted with over the span of these years, and it's been absolutely amazing, right? Like this individual has a large account and he's done really well. I mean, just because of the volatility, what we've been able to help him with, it's phenomenal. Like we have here a couple members that joined. He's done really well. One of my students actually, started learning, and I gave him guidance. And eventually, what he did was he did quite well for himself in a few months, and he went out and bought a Tesla Model X with his gains. Right? Again, each one to their own. Right? The opportunities are there. Everyone has the opportunity to benefit from this. These are just a few people that I've selected. Okay. I mean, we have a perfect rating on Google reviews and on Facebook. You can check us out. But I genuinely put my heart and soul into every single individual I interact with. That's my goal, right? Again, I could go on all day, all right? But you're probably wondering, well, how are these guys doing? How are these members doing? Well, you can see here are some of the profits just from some of the trades here that we've done in the group, right? We've traded Canopy Growth, like I said, a few times, and made a good 10 grand almost on one trade, just buying and then eventually rotating out. Same thing with another marijuana ETF. You can see at the bottom, one of our students and one of our members actually, bought some options, and what he did was in one day, he had about 146% return just one day. Okay, does this mean that this is the norm? No, but it's possible. It's absolutely doable. Okay, here's another member. Started off with, I would say, about 6 grand, and eventually in 3 months he turned 6 grand into nearly 20 grand, just from his trading on his phone. He's 19 years old. Okay, he's 19 years old, just here and there, learning with us, gaining insights. Another person, same day. Okay, this was one trade, same day, in and out. He put a $290 trade on and exited with $930. So that's a good profit. Okay, about 600. Let's just say $600. Right. All right. So here's another individual who's also young. Started with us again. He used to do a lot of penny stock stuff for whatever reason. Okay, he thought that was the way. Well, he realized that there's tremendous opportunity out there to do well, and he cleared about $957 just on one day, one trade. Just like that. I mean, it's phenomenal. I could go on and on and on with these kind of results, but it would take up tremendous amount of time. Right. Again, another one of my students and members, he started off with actually a very small amount, $500. Okay, $500, and he's actually a medical student, tremendous guy, former war vet, and he's actually finishing up his medical program, and so he doesn't have time. He doesn't have much time. He has a little bit of time here and there, so he places a few trades, and he turned about $500 into 4 grand. Okay, and now he wants to double that again, right? So another one of our members, made 5,100 just by being part of our community for a couple months. Tremendous opportunity. I want to give you guys the full access. Okay, I want to give you my time. If you are so willing to take me up on the offer, you can send me an email. Okay, this is open to each and every one of you. You can send me an email, and we can figure out a time to have a consultation on the phone. Again, I do this from my heart. I hope you guys can see that. I hope you guys value and understand what I'm providing to people out there, because I take what I do very seriously. I'm very passionate about it. And my goal is to counter and essentially push back against all the garbage that's in this industry. That's why I do what I do, to help people and turn the tables on all the bullshit that's out there. All right, we're gonna have a phone call. We can go over your options. We can go over your financial picture. We can set up a plan for you and give you some more insights as to what direction you should go in. All right, but because you stuck around, because you're here till the end, all right, you're here till the end, I want to reward you for being here. I want to say that I will be giving each and every one of you an opportunity to become a member for 1 month, okay? For 1 month, our regular monthly fee is actually 149 bucks, but you can join us for 1 month, see how we do, see how you do, get an idea, right? Plus, I'm gonna give you my crypto trading course, okay? That actually retails for $9.97, but you can get all that, 19 bucks. 19 bucks. I wanna make sure you guys can benefit. If you feel like, you know what, it was good, I don't wanna continue, by all means, no obligations. Do not miss out on this opportunity, because you don't know. A lot of people don't know what they're missing out on because they're not aware of what's out there. They don't understand the content, the value, the insights that's out there. So they just brush it off, right? Don't be one of those people that is not taking the opportunity. Don't miss out, because you can see that there has been a tremendous opportunity in the markets, and there's opportunities every single day, right? You can participate for $19. All right, here's the link, throwing up the link. I'm going to also throw up the link in the chat box here as well. Check out www.secretentourage.com/Riz Elite. Okay, go on the website, check it out. You can see that the link is posted there. Highly recommend you guys check it out. Literally, for the price of pretty much 2 Starbucks cafe mocha lattes, whatever, okay, you can get access to tremendous insight, tremendous value, get access to me, learn a lot, and hopefully earn a lot, right? Just in this 1 month, right? You can decide after that what you want to do. Completely leaving it up to you guys. I hope you have enjoyed this webinar. I hope you have gained an understanding of what's possible, what's out there, and it's piqued your interest, right? Hopefully it's motivated you to move in this direction sooner rather than later. You know, if you had to take one thing away from this, it's start sooner rather than later. Learn from people that are doing it. Learn from people that are doing well, that have experience, and start. Okay, because there's plenty of people that say they will, but they don't end up doing it. All right, so definitely recommend you guys take me up on this opportunity. If you are not satisfied, honestly, send me a message. I will make it right. I've never had a single person, not one person in my entire life, who has come up to me after interacting with me and said, Riz, you know what? I didn't get anything out of that. Not one person. Okay, so I frankly 100% am willing to double down. And if you're not satisfied for whatever reason under the sun, you can reach out to me and I will make it right for you. All right. But either way, I stand by what I do. I stand by my pedigree. I stand by what I provide to my students, to people willing to learn. That's all I care about. People that are willing to learn and grow are the people I want to align myself with. All right. So with that said, thank you for joining me. Let's move on. Let's kick things off to the Q&A session. You guys can ask your question to the question box. Depending on how many of you are asking questions, I will repeat the question, and then so that others can see what's been written, and then I will answer it. So by all means, type your questions into the question box, and I will do the best I can to answer. Let's see here. Give me a second. Okay, here we go. Any books that I may recommend? Good question. Uh, so there's plenty of books. In my experience, I've read plenty of plenty of books, all things to do with finance, and I can tell you, there's some that are good, some that are not. There's plenty of books that are, I would say, good, but they're going to be very, very dry, right? They're going to be very, very dry. I have not yet in my lifetime encountered any book that has turned someone into a better trader or investor. But with that said, pretty much the holy grail, or the finance Bible, so to speak, is, you can look up, maybe you've read it or not, but you can look up The Intelligent Investor by Ben Graham. That's pretty much a go-to. Again, keep in mind it's an older book. It's still relevant today, but it's an older book that really sets up the opportunities in the markets. And Ben Graham is one of the absolute grandfathers of value investing, right? So I hope that is one book that you can start with. If you have any questions or anything, do let me know around that. But that's one book that I usually recommend to pretty much everyone that's interested. All right, so another question. Let's see here. Going through the list here, bear with me. Let's see. What's long term here? 30 trades usually happen in how long, right? So good question there. Usually we place, give or take, approximately, maybe a trade or two a day. That was essentially the opportunity for you to understand how you can compound your wealth, right? Whether it be in 30 trades and 50 trades, 10 trades, or 100 trades, right? The whole point is that you are sustainably and consistently growing. There's going to be times where your account value is going to drop. There's going to be times where your account value is going to skyrocket, but it's not the end all be all. You are in it for the long term. Okay, as a trader and investor, so long as you can go through the volatility, you will be more than fine. Okay, again, there's no precise amount. There's no right or wrong answer, right? There'd be some times where we may place, like, literally 6 or 7 trades in a week because it's been a busy week. All right, it's been a lot going on in the market. Sometimes some weeks are slower, and what happens is, we don't want to force trades, so we place maybe a few trades that we see. We are very selective with our opportunities, and we explain that. We explain that to our members, right? We explain that, okay, this is the trade we're taking. Here's why we're taking it. Again, no one does that, all right, because they're just a lot of these chat rooms, a lot of these places I've been in, because I've done my due diligence, they just call out trades. They don't take the trades themselves, right? So they're just a commentator at that point. So they have nothing to lose. They don't place trades themselves. They're not taking the trades. They don't have any money at risk. So it's really easy for them to call out literally dozens and dozens of trades a week, right? We don't do that. Okay, we are very selective with the trades we place because my money is on the line, our investors' money on the line, our fund is on the line. So same way, our members' money is on the line. I want to make sure that, granted, there's no guarantee in every trade that we take, but we do want to make sure we've done our due diligence and we are essentially trying to take the right side of the move, right? Hopefully that answers your question. How early can you expect returns? Jazz asks. Well, that's a good question. That one is going to be very, very dependent on you. You could literally place the first trade and make money. Okay, or you could place, a few trades, and maybe depending on the side that we took, depending on how the market's going, because the market can go against us, right? There's always those risks that we simply cannot be aware of because literally we can't tell the future. But literally you can make money in the first trade. It's really up to you. Obviously, you're not doing this just to place one trade. You're doing this to consistently grow. All right. Moving on. Next question. Which platform is ideal to trade on? Ibrahim asks. Well, there's plenty of platforms, right? We have plenty of platforms. If you join us, I can walk you through the ideal platforms. There's brokerages provide their own platforms. So I'm not affiliated with any brokerage, but depending on where you are, there's TD Ameritrade, there is E-Trade, there's Fidelity, there's Charles Schwab. These are all major, highly trusted and extraordinary brokerages, and either they'll have a platform for you. If not, then I can help you figure something out. All right, continuing on, which is the email I'm assuming you can contact me at info@rizinternational.com. All right, hopefully if you have any questions, you can send me an email there, and I'll definitely do my best to get back to you. Also, I hear another member asked, I'm hearing that there is a stock market crash or correction coming soon. Right. Okay, so this has been something that everyone has been asking me. When's the next crash coming? We're in a 9-year bull market. In fact, this is one of the largest or longest bull markets in history. I say no one knows. There's a lot of talking heads out there. There's Kramer. There's all these people on MSNBC just trying to get views and ratings, and they'll talk up anything, right? The reality is no one knows. Okay, corporate earnings are still solid. Yeah, there's a lot of political trade headwinds, but I don't see sort of a crash happening out of the blue just yet. Okay, when we look at proprietary data on our end, we don't see anything happening for at least the next few months. Okay, so it's not like things are just gonna puke tomorrow or next week. All right, but we are there constantly assessing. We are there constantly looking to take advantage of no matter where the stock market goes. Because as I said, if the markets do go down, you can bet that we're going to be there trying to make money off that drop. Okay, because when we short, we are taking the other side of a trade, and we're providing a vital, I would say, a vital service to the market by going short. The market needs people that go long, buy, and the market needs people that short sell to balance out the equation. Okay, it's the yin and yang. So we have no problem taking the other side if things do start going south. All right, so hopefully that answers your question. Whether markets go up or down, we are there to take advantage of that. All right. Same thing, Jazz. Good question. How much should you start with? I usually recommend people starting with, depending on where they stay, depending on the brokerage fees. Like, Robinhood is a great opportunity for you to open up a brokerage account. They have no fees. The only problem is you can't go short in Robinhood accounts, right? So there's no fees. So in that, you're saving a lot of money that you're not having to pay commission. Commission could be give or take $5 per trade. Robinhood, it's zero. So ideally, depending on which brokerage you start with, you could very well start with a couple grand. Like I said, one of my students started with $500. Okay, but ideally at least 2,000 to 3,000. 5,000 is a sweet spot. Okay. I got another question. Would you rather trade Forex or stocks? Stocks, 110%. Not even going to think about that one. Okay, not even a contest. All right, I'm not going to go into the reasons why. I'm not here to bash Forex, but I've been around long enough to know that the stock market is the #1 way of growing your wealth in the long term. Right? Q&A. Someone asked a question, not showing their name. If they want to sell long, is there a certain amount of time, day, or month that the price might be low? Yeah, sure. We call that seasonality. We call that seasonality, or certain markets or certain stocks are cyclical. Yes, so there are certain companies that do worse in certain time periods and certain companies that do better in certain time periods. That's an opportunity to take advantage of. Okay, again, a very, very in-depth topic, right? How much did I start with? About $5,000, give or take, when I was approximately about 16. I wasn't even old enough to open up my own account, so I had to have my father open it up in his name. Once I turned 18, then I was able to be sole owner on the account. All right, so give or take 5 grand. Can I work in the U.S. stock market from Costa Rica? Yeah, sure. Yeah, you can definitely trade from anywhere. Like, you can trade the Chinese market if you're in the US. You can be in China, you can be in Japan, trade the US market. Absolutely. You just have to make sure that the brokerage that you open an account with supports that market. All right. Do I email info@rizinternational.com for the 30-minute consultation. Yeah, send me an email, Miguel. Send me an email. I'll get back to you. Again, I'm probably going to be swamped with a bunch of emails, so bear with me. All right. Why dismiss Forex but not crypto? Crypto is intangible. You're right. Crypto is extremely volatile. It's completely nosedive. Crypto is, I would say, more volatile, which is the reason why I recommend people, if they so want to, put some money in and trade it. Even before this massive crash in crypto, I always told people, I said, okay, first of all, this is a new asset class. Okay, there's a lot of hype around it. Don't be a bag holder. Don't just buy and hold, think you're going to become a millionaire. Okay, trade it, trade the volatility. That's what I've been telling people, and that's what I teach in that trading course. I teach people how to trade different cryptocurrencies and take opportunity of volatility. All right, so hopefully that answers your question. What about Tony Robbins, get second opinion investment firm with Peter Mother? Again, Tony Robbins is great at what he does. He has aligned himself with Peter. That's fine. They are more into passive investing, which is great. If you think that's the thing you want to do and that's the route you want to go, by all means, just understand by passive investing, you are pretty much going long the market. You're buying the broader US market, and whether it be different sectors, different ETFs, but all you're doing is hoping that the market goes up. Well, if the market goes down, just like every mutual fund, just like every passive investor, you're going to be screwed. This is why I say learn to actively trade and invest. Okay, that's on you. All right, what happens after the 19 months is up? Yes, good question. You can choose if you want to continue or not. It's $149 a month. If not, you can let me know. We'll cancel it before the renewal. Okay, no fuss, no obligations, no problem. Right? Can you go over going long again? I was a little slow taking notes on that slide. Okay, yeah. So going long essentially just means you buying the stock. Okay, it just means you are buying the stock. Nothing special. All right, we just call it going long. In other words, you're buying. Going short is taking the opposite side. You are short selling the stock. You're pushing pressure down on the stock. You're hoping the stock drops, okay, after you short, so that you can eventually buy back, give those share back to the person you borrowed it from at the broker, and keep the difference. All right. Hopefully that explains it. What would you guess my ROI is? Charles asked. Would be if only if I started with $1,000 for the first month. Again, very, very dependent on the types of trades you take, depending on the markets. There is no specific answer. Like literally, I can't tell you what's going to happen in the market tomorrow. I wish I could, but I can't tell you what's going to happen tomorrow. So I'm not even going to bother trying to guesstimate what you could make in the first month. Okay, you have to know, are you willing to take the risk? Are you willing to learn? Are you willing to participate? If the answer is no, then, you know, unfortunately, it may not be right for you. Again, I don't want to sell people on a pipe dream. Be willing to lose the capital. Doesn't mean you're going to lose it all, but at least go in with the right mindset. Okay, last thing I want is put someone to put $1,000 or $5,000 of their life savings, and they don't take some of the right trades, and then it turns into 2,500, and they're freaking out because they can't make rent. Don't do that, right? How would we best utilize a membership for a month with you if we haven't started trading yet? Should we already have an account? Good question, Brianna. This one is ideally what you're asking is you want to get things set up before taking advantage, right? Usually I have people that start from scratch. When someone is starting from scratch, I recommend they learn how to trade using my proprietary strategies, using my techniques, and I teach people in one-on-one mentoring how to do it, how to get the brokerage account set up, how to look at trading platforms, how to do all that. Then they can have that ongoing guidance and ongoing, let's just say, hand-holding and insight of the elite membership. But if you're completely new, have zero experience, don't have brokerage account set up, I recommend starting on the right foot by learning from me how to invest and trade in today's financial markets. Hope that helps, Brianna. What trading platform do you use the most? I use my brokerages. I have my own personal brokerage at CIBC, and then we have interactive brokers for the hedge fund, and they both have their own platform that I have access to, so I use that. How much is options trading part of what you teach? So we do have in the elite membership an options guide that I've written. It's part of it. So I mean, feel free to join, take advantage of that. It's like a primer that explains how options kind of work, the kind of trading that we do for options trading. And it's a start. It's a start, right? Because a lot of people have heard of options. There's tremendous potential for gains, but a lot of people may not know how to utilize them. All right, so it's up to you if you want to take advantage of that. But my main focus is in stocks, whether it's one-on-one mentoring. I teach people how to trade stocks, and especially in the elite membership, we predominantly focus on stock trades. We do send out options trades as well that we take, but if I were to break it up into percentage, I would say it's maybe 85% stock trades and then maybe 15% options trades. All right. Yes, Angelina, definitely send me an email. We'll set up a consultation. All right. Definitely send me an email, guys, if you want. Again, I'm giving you my time, no obligation. Again, I genuinely think people owe it to themselves. People owe it to themselves to learn and understand the opportunities that they have. All right. So yeah, definitely send me an email. We'll set something up. Ivan asked, if I'm in debt for 10K and have 2K at my disposal, should I just pay my debt down or should I do stocks? Honestly, pay off the debt, decrease the debt to a manageable level. You know how expensive that is. If it's really expensive in terms of, high interest rate, if it's high interest bearing debt, you want to clear that off. Okay. As much as I'd love for you to be a part of the market, as much as I'd love for you to join us anytime, I will say for your sake, pay off that debt, because the last thing you want to do is maybe wish that you had not risked that capital, right? Because remember, every time you place a trade, there is a risk involved. Every trade, I don't care if you're trading Apple, I don't care if you're trading some XYZ company, there's always a risk. So if you have 10 grand in debt and you only have 2.5K, I would definitely try and decrease that debt, start saving up, start setting up a savings plan, create like an account or a savings account where you are saving up. I cannot stress this enough. Starting on the path to building wealth starts by saving money. I have so many people say, Riz, I have $200 to my name. I want to quit my job by the end of the year because I want to make money in the market. It's a painful question, but it's far too common because people don't understand the reality of actually needing some amount of money to make money. You need to have money to make money, especially in the stock market. You don't have to have a lot of money, but you still need some money. Okay, $200 isn't going to cut it. All right, so in your case, I would definitely put it towards the debt. Okay, just give me a second. A lot of questions. Okay, getting acclimatized here. Right, so what do I think about Tim Sykes' approach to trading? Again, Tim has his own style. He likes to trade very, very small cap, micro cap stocks. I mean, he has a style. It's not my style. It's not the trading that I do or the trading I teach. Personally, I'm not a fan of it, but so be it. All right. So your company does not trade currencies at all? I don't trade Forex. No, I don't trade Forex. I mean, the only Forex transactions we would do is for changing our currencies, but not Forex trading. Okay, I don't bother trading Forex. I don't need to. Okay, I don't need to hedge any currency on my end. So it hasn't been something that I feel like I need to put my time into. We have too many opportunities day in and day out in the market, so it makes no sense for me. All right. Moving on to the next question. Let's see here. Is it better to lump sum invest or slowly inject capital? Great question, Barry. Definitely recommend starting off with a certain amount, a sizable amount. After that, I would then contribute, right? Nothing stops you. Like I started with 5 grand. You can start with 5 grand, whatever you want. Nothing stops you from adding more money and utilizing capital. That's going to snowball your account further because you are utilizing your, let's just say, your funds more valuably. Maybe there's certain opportunities in the markets 2 months after you started, so you put more money in, and now you're able to utilize that capital better than you would have been able to a couple months ago, right? So don't be shy. Don't be afraid of, oh my God, okay, I'm starting with 5 grand, that's it. No, the account doesn't lock itself, okay? You can continue to put funds in. Obviously, you can continue to take funds out too, but you can continue to put funds in as you please, which is what I recommend, all right? Matt asked me a question. You don't have to answer this on the call, but after the first month, I'm assuming I'm going to like it. How much will it be? Is it 150? Yes, 149 a month from there on, okay? Why do I recommend against Forex? Again, it's not that I recommend against Forex. I personally don't like it. I think really there's no physical asset there. You're just trading a currency pair. There's no technology behind it. There's no momentum behind it, kind of like crypto. It's really trading currency pair of usually macro events, okay? You're trading pips, right? You're trading a leveraged a currency pair, whether it's by 100, 200, whatever the case may be. Not appealing to me, all right? Miguel asks, I'm working 9 to 5 during the week, Monday to Friday. Can I still place trades? 100%. 100%. We place maybe could be any time between 9:30 a.m. Eastern to 4 p.m. You don't have to sit on your computer or on your phone throughout the day. You'll get a message. You get complete access to the moment we place a trade, and it's up to you. Maybe you want to just quickly look at your phone, place your trade. You could definitely do it. We have people that are from all over different parts of the world, have different jobs, different businesses, different family obligations, and they do it. So I have no doubt that you can do it as well, Miguel. If I only have $500 to start trading, what are my chances to at least triple that in 30 days? Good question, Henry. A very speculative one. I mean, you could be like one of our students and members who, tripled an account in a couple months, or you could do it in a month. Who knows? It's definitely possible. The chances are there. I would put it maybe 25, 30% if I had to. Okay, all depends on what kind of trades you take position of. Okay, $500 is not much, so just keep in mind that you're going to be limited in the types of trades you're going to be able to take. All right. Jazz says your card is getting declined, not sure why. Send me a message, send me an email, we'll figure out what's going on with that, okay? And we'll get to the bottom of it. Justin asks, is your teaching based mainly on technical analysis, fundamentals, or a combination of both? Awesome question. I am a perpetrator, firm believer in both fundamentals and technicals. In fact, I teach in my mentoring fundamentals along with technicals. A lot of people just, we look at charts and lines and all that. Well, sure, technicals can be important, but fundamentals have a place in today's market, and the type of trading we do, fundamentals do end up having a factor depending on how long we open and keep open the trade. Okay, because earnings are fundamentals, right? Earnings depend on how the company is doing, how their bottom line is, how their top line is, what their earnings per share was, how much revenue they had. Those are fundamentals. And if we're holding a trade open through earnings, well, we got to know what's happening, right? Thanks for the webinar. Stephen said, what is the name of your hedge fund? Do you have a seat on the NYSE? I do not have a seat on the NYSE. Hedge funds don't have a seat on an exchange. You won't find anything. You can actually check out my website, but I don't actively market my hedge fund. All right, it's only for closed investors. Usually it's through referrals, right? Brianna asks, should we already have an account built up before we're getting the most out of it? You want to have some amount of capital if that's what you're asking. Okay, definitely want to have some amount of capital there to utilize and take benefit of the membership, right? On average, how long do I hold my trades for? Justin asks. Well, that depends. I would say a few days to maybe 2 or 3 weeks on average. Okay. Next question, can a foreigner invest? Obviously, dependent on what country you're in. You can definitely open up a brokerage account and get started, so long as your brokerage is, I would say, available and has access to trading the specific exchanges. So if you live in, I don't know, let's say Germany, and if you open up an account in Germany, you have to make sure your brokerage supports trading on US exchanges. Most of the trades we place are US based companies. All right, since this is not day trading, what time usually in the day do you do this? So we do this throughout the day. It's throughout the day, but we're not going in and out on a very, very short time span, right? We are trading during market hours, obviously, whether it's 9:30 a.m. to 4 p.m., sometime in between when we see the opportunity, but we're not sitting there going in and out multiple times of different trades. That's what day trading is, all right? Do you trade live with the group? We do have sessions where we go over sort of recapping the trades we place. Sometimes we do have a session where we trade live, but most of it is all through our chat room and alert notifications. Can you cancel after your first month? Absolutely, sure, definitely up to you. Again, I leave that up to you. Hopefully, I would hope that you gain value, insight from it, and continue, but you have the opportunity to cancel. Mark asks, is Forex technical and fundamental knowledge transferable into stocks? Yes, the technicals is transferable, fundamentals to a certain extent. Forex isn't a company, it doesn't have fundamentals per se. It has macro data that influences it, but for stocks, you have fundamentals behind a company. You have how much the company makes. You have how much the company is generating in revenue, what products they sell, what management is doing, who's the new CEO or which CEO left. All these things matter. So in that sense, it wouldn't be transferable, but the technical stuff would be. All right. Mike asked, do you mostly buy and sell stocks, shares, or do you also trade options? Again, mix of both, but mostly stocks, okay, and some options. Do I give lessons on options and trade on your platform? So like I said before, I do have a very brief guide on trading options. It's up to you to kind of wrap your head around it. I do recommend people learn how to trade stocks and understand stocks first, because it helps when it comes to moving on to options, okay, because they're both correlated. All right. Romeo asks, why is it that Forex is so popular? I mean, it's popular with the kids with small account balances because they get to trade with very, very tiny accounts with the help of leverage. Again, a lot of it is these MLM places that's really hyped up Forex, and frankly beats me. It's not really my cup of tea. All right, Miguel, you just got your first full-time job after college, making great money. Should I save my money then buy like crazy when the market takes a dive? Yeah, sure, but you have to be careful, because when you buy like crazy, well, it depends when you're buying, because what goes down can continue to go lower. All right, so there's no way for me to reasonably answer that question, but hopefully you have some sort of insight into when and how and what you should buy if and when the markets definitely individually actually drop. All right. What brokerage do I recommend? Again, plenty of options depending on where you are. TD Ameritrade, Fidelity, Charles Schwab. Robinhood is a free mobile brokerage. You can open up an account as well if you are a US resident. All right. Next, looking for someone to mentor, like to volunteer, just signed up. Okay. Definitely looking to mentor people. You can take a look at my website, www.rizzinternational.com, to take a look at what we offer and the pricing for that, okay? How much should you put in for a week? Again, tricky question, all depends, all right? All depends on what you're able to. How long is this deal available? I'm gonna keep it going for, I would say, another give or take 48 hours, at which point I will take it off the table. All right, thanks for your time, Riz. Appreciate your insight. Look forward to learning more. Thanks, Corey. Maybe a beginner question, but what is an option? Well, I'm not going to do an option breakdown now, but it's a derivative product that is influenced by the price movement of the stock itself. Okay, so it's more of a complex product than stocks. Okay, there's a lot more moving parts. If I have to really encapsulate to that, a lot of moving parts. Okay. You just joined, I don't know what it is. You just joined IML, but better off canceling and joining. Sure, I mean, that's up to you. We'd love to have you. It's up to you. All right. Are debt REITs and mortgage REITs the same thing? Depending, yes. Depending on the wording, yeah, mortgage REITs are technically a creditor REIT, but I haven't heard the term debt REITs, but I'm assuming it's the same thing. All right. Since this is not day trading, I believe you've already asked that question. Let's see. I'm just looking here if I'm missing any questions. Jazz, you're asking if this webinar is recorded. It is. Hopefully we'll be able to get you a link afterwards. Let's see here. Do I teach money management, risk, and risk management? 100%. I do teach that in the mentoring. I don't teach that one-on-one in the elite membership. Okay, but if you are mentored by me, take the mentoring program, you will be taught proper risk management. Okay, Joe Quinn asks, recommend forming an LLC? Sure, if you think it's the right thing for you, definitely go for it. It's not worth it if it's a very, very tiny amount, but if you're dealing with larger sums of money, then sure. Okay, just want to confirm I'm not missing anything else. I hope I've gone through all the questions. I apologize if I've missed your questions. I want to thank you guys for sticking around. Thank you guys for spending your time. One last question came in. Since Forex is based off of pips, what are stocks based off of? Well, dollars, pennies and dollars, right? How much dollars you're making per trade. Okay, pips are just essentially the spread. Okay. Don't ask me why they're called that, but yeah. All right. Again, guys, thank you for joining. Means a lot to me. I appreciate it. Hopefully you've gotten immense value, insight, and it's opened your mind into what's possible in the market and given you a first point of contact. If you have any questions, don't be shy to reach out. I'm very, very active. I love interacting with people and doing the best I can to help them and point them in the right direction. All right. So definitely check out our website. Check out secretentourage.com, REITs Elite, to see this tremendous opportunity that you have. You can send me an email at info@reitsinternational.com. Don't forget to follow us on Instagram. Don't forget to also like us on Facebook as well. All right. Appreciate your time, guys. This is been a blast. Wraps up today, and hopefully we can get you guys the recording, and we will go from there. Thanks a lot. Take care, guys.